What if I told you that the difference between a comfortable retirement and absolute financial freedom is just a few small decisions made today? Most people think they need a fortune to start, but in the next 10 minutes, we're going to prove that consistency is your greatest superpower. Is it worth sacrificing that daily luxury for $100 a month, or should you push for that $1,000 monthly goal? Welcome to the 10-year sketch. We're about to visualize exactly how your money grows when you leave it alone. Let's look at the math. To make this comparison fair, we're using a diversified index fund. Think of it as owning a tiny piece of the most successful companies in the world. Instead of picking one winner, you're betting on the entire market. Over time, the market has historically trended upward. We'll base our calculations on a 10% annual return. While markets fluctuate, this is the long-term historical average of the S&P 500. The strategy is simple: dollar cost averaging. You invest the same amount every single month, regardless of whether the market is up or down. This removes the emotional stress of timing the market. You aren't guessing, you're building a system, and systems create wealth. Before we reveal the year-by-year breakdown, please consider subscribing to Sketch Capital if you value fact-based financial education. Year 1 is the most difficult year, not because of the math, but because of the psychology. This is where most people quit. For the $100 investor, you've put in $1,200. With growth, you have about $1,267. Meanwhile, the $1,000 investor has over $12,000. The gap is huge, but it's currently just a reflection of your deposits. By year 2, the excitement has worn off. This is the grind phase. Your portfolio isn't doing the work yet. You are. The $100 path hits $2,600. It feels small, but you've officially built the habit of a millionaire. The $1,000 path is at $26,000. You could buy a car, but the goal is freedom, not temporary status, so we keep going. In year 3, something interesting happens. Compound interest begins to spark. Your earnings are finally becoming noticeable. The $100 investor has $4,200. $600 of that is pure profit from the market's growth. At $1,000 a month, you're at $42,000. You've earned $6,000 just for sitting on your hands. That's the power. This is where the temptation to spend kicks in. You see a large number and want to use it, but the magic hasn't even started yet. Year 4 is about momentum. Your portfolio is a small engine now. It's starting to move on its own inertia. The $100 path reaches nearly $6,000. You're over halfway to your first $10,000. Stay the course. The $1,000 path hits $59,000. You've now earned over $11,000 in interest alone. That's a year of work for some. Year 5. The halfway point. This is where the visualization of wealth becomes undeniable. The curve is no longer flat. The $100 investor has $7,800. You are approaching the psychological milestone of $10,000. The $1,000 investor is at $78,000. At this point, your annual interest is almost equal to your annual contributions. We are now entering the inflection point. This is where the earnings on earnings starts to outpace the money you're putting in. In year 6, the growth curve begins to verticalize. Every dollar you invested in year 1 is now working twice as hard. You're at nearly $10,000 on the $100 path. You've earned almost $4,000 just by waiting. The $1,000 path hits $99,000. You are 1 month away from 6 figures. The gravity of your wealth is pulling in more. Year 7 is the breakthrough. For the $1,000 investor, you've crossed the $100,000 mark. This is a life-changing milestone. The $100 investor crosses $12,000. You have now earned more in interest than you put in during your first 4 years combined. If you're still watching, you have the mindset of a builder. Hit that like button to help this financial logic reach more people. Year 8. We call this the harvest. You are no longer just planting seeds. You are maintaining a forest that feeds itself. The $100 path reaches nearly $15,000. Your interest earnings are now providing a steady dividend to your future. The $1,000 path is at $147,000. Your money made $27,000 this year alone. That's passive. Year 9, the final push. You've been consistent for over 100 months. The light at the end of the 10-year tunnel is blinding. The $100 investor has $17,500. You've nearly doubled your total contributions through market growth alone. At $1,000 a month, you're at $175,000. You are now seeing the true divergence of wealth. The gap is widening. And here it is, Year 10, a decade of discipline visualized. Let's look at the final numbers for both paths. The $100 monthly investor ends with $20,655. You turned $12,000 into $20,000. That's freedom. The $1,000 investor ends with over $206,000. You've earned $86,000 in interest alone. The difference is 10 times, but look closer. The effort was the same. The discipline was the same. Only the volume changed. $20,000 is a powerful safety net. $200,000 is a foundation for a life where you never have to work for money again. Most people think wealth is about exciting trades or secret tips. But as we've seen, real wealth is incredibly boring. It's just time plus math. The tortoise doesn't just win the race, the tortoise owns the track. Consistency outlasts intensity every single time. Of course, the market isn't a straight line. There will be red years, there will be crashes, but the 10-year trend has always been your friend. When the market drops, remember, you're buying companies on sale. Wealth is made during the bear markets, it's just realized during the bull markets. Choosing to invest $100 or $1,000 isn't about deprivation. It's about trading a small pleasure now for total control later. Every dollar you invest is a soldier you're sending out to fight for your freedom. Don't let your soldiers sit idle in a checking account. So how do you start? First, open a brokerage account. Second, select a low-cost S&P 500 index fund. Third, automate your deposit. Automation is the secret sauce. If you have to think about it every month, you might talk yourself out of it. Let the machine do the work. If you think 10 years is impressive, you should see what happens at 20. Compound interest isn't linear, it's exponential, it explodes. That same $1,000 a month becomes $750,000 in 20 years. The last 10 years do 90% of the work. But wealth isn't about the numbers on a screen, it's about why. Why do you want this? Is it for your family, your peace of mind, your time? When your why is strong enough, the how becomes easy. You won't mind the sacrifices when you know what you're building toward. Whether you have $100 or $1,000, start today. The best time to plant a tree was 20 years ago. The second best time is now. Plant your financial seed today. Water it with consistency, protect it from the storms of distraction, and watch it grow into your freedom. At Sketch Capital, we aren't just teaching you how to save. We're building a community of future-minded leaders who understand that wealth is a tool for impact. If you're ready to take the next step in your financial journey, discover our other resources at Sketch Capital. Your future self will thank you. Thank you for your time. I hope this was valuable for you.